secure our accountant jobs with the incoming of AI? Thank you.
Whatever technology comes in, you always need a numbers person. And what I've seen even today, one of the qualifications that somehow to a certain extent gives you a better opportunity of employment is accountancy role compared to many other roles, at least here in Kenya. So other than looking at yourself as an accountant being secure of a job, is it's a good part that how do you start thinking ahead to adapt now to some of those automated functions that will be coming in, like eTeams is already automation. If you look at posting of invoices, it's already automated. Everything is online, but the role of the accountant will always be there, because in as much as these things are being automated, you still need someone to be able to review and ensure that they make sense, whatever is being reported. So you can't totally say that you're going to be out of the picture, but somehow moving forward, those roles will change. Maybe in terms of hierarchy of structure within an accounts department, the way you have an accounts clerk, maybe senior accounts clerk, especially for government institutions, and senior manager, super senior manager. Maybe it might end up now, what I foresee is that some of those roles may become redundant in the hierarchy to a more flat structure, because the systems, the automation might just come from, once things have been posted and going directly into interpretation. So, but I don't see that role really getting out of the picture, at least for now.
When you talk about artificial intelligence, one of the key gains we've had is efficiencies in the business. So if you take your typical accountant who does analysis and trends, we are saying that is going to be faster with higher precision. Now, who wouldn't like that? One of the biggest debates, like I personally have with my teams, is certain processes and things that they do that take up so much of their time. And every time they say that, I actually tell them, come sit here with me. I want to see how long this process takes. And there are certain parameters that can help you in a very good, with very high accuracy, be able to tell the volume of business you expect from these guys, where you expect to hit your targets and where you don't expect to hit your targets. Now, the accountant today will have to take like 3 or 4 days scratching their head on that. Now, if that comes in to support that role, it means we are able to quickly give insights to the business. This accountant can sit back and say, okay, what does this look like? What does it mean for the business? So we spend more time thinking about where the value lies. Because I think currently there's a lot of doing and no sitting back, and that's why they say you've always got to find time to sit back and say, okay, let's look at this. What does it mean? What are these trends telling us? Who should I be talking to? Who should I be collaborating and asking questions to? So I think it is going to be very exciting for whichever accountant at whatever level, in my view. Even that accountant who is doing bank reconciliations. Yeah. You've got your bank accounts, quickly the numbers run through, you've got that cash flow analysis come through, and you're thinking, wow, in a minute, in a click of a second, you're able to tell what these projections look like and what kind of cash flows you expect from the business that you have gotten forecasts from the marketing people. So that guy will come and say, my goodness, in June, we're actually going to have this excess cash. They call up the guys who are in investments. So basically, I think we must embrace and not be, we must be open to the possibilities of AI. Because I think we've not even seen what we don't know. They're just surprises every time. When ChatGPT came, we were all like, Now today, people are using ChatGPT when used right in the right way to quickly produce their reports and analyze. I put my financial statements here, I put ChatGPT here, and it gives me quickly an analysis of the results. You don't need to read my 60 pages document. You quickly say, give me an analysis of this company's performance. Quickly. So I think there is a bright future for every accountant. You just must be ready to learn, and unlearn, because we are also attached to things we've done before. We think, I have to spend all this time doing this kind of analysis. But I think there's space and it's going to be exciting. It's going to bring efficiency so that we're able to spend time doing what. And the young guys don't want to spend time doing mundane things. That's what I was saying. Practical example. My team says, Rachel, we cannot be spending hours doing this. We are not excited. And then the guys come in the morning, they are gloomy, they are not happy, and I'm wondering, oh my goodness, what's up? It's because we are not quickly getting efficiency into their processes and the trends. Yeah.
Thank you. I think I want to concur with my colleagues here. AI will definitely have an impact on accountants. As PM Mohammed said, that role will not be extinguished as such, but the number of people required in a department, of course, will be much less. My take is that the accountants who will survive in this AI, and I'll give you an example of even some students who have been surviving on online lighting. Actually, I know of students who have been paying fees for years. Some of them even bought plots using the online lighting, because in the US, those guys were not ready to do any assignments, so they were getting a lot of money from America and Europe as such. But eventually they realized they can't get any money. Some of them now they are looking for other means of survival. Online lighting, zero. So the question here is, what type of accountant will survive this AI? And in my opinion, the accountants that will survive the AI are the ones who will have additional skills. For example, data analytics, that's an area probably that will keep on changing and changing and changing. If you have additional skills in your profile or in your career or in your CV, it means it will no longer become CPAK. At that point, I think they will be putting other requirements that you need to come and take up the positions in an AI environment. So there are even AI driven courses now. If you go to some universities, I don't want to market some here because they are my competitors. They have started AI driven courses, and I can tell you, if you start getting in touch with such programs, probably some of them are even short 1 year, even another 6 months. Just get those short courses that are AI driven, and I can tell you, you will be able to be the accountant of the future. Thank you.
You know, as Dr. was talking here, she reminded me of some things. Again, in my experience, end month was a headache. It meant sleeping in the office. Yeah, and one of my toughest moments is when I was working in Uganda. That was between 2008 and 2010. And our investor was in South Africa. So, you know, by the 1st of every month, we had to send what you call our flash reports to, I say, Johannesburg Stock Exchange. So if the 1st was a Monday, that means I had no weekend. It means I had to work throughout the weekend just to make sure that the flash reports are ready by the 1st. Now, one of the challenges I had was accounting for something called deferred revenue. So because the business used to raise an annual invoices for communication and internet. But you see now you can't account for that as revenue. So if you raise an invoice of $1,200, it means you have to go to each client and now subtract, like you extract all the invoices and do it in Excel, and then you ask yourself, where's the value addition here? Okay? So the exciting part is that I guess you're moving away from the non-value adding activities now to more value addition with AI coming into the picture, because I could tell you, I remember those days when we started Kensel. Kensel was one of the first places when we started, if you remember Kensel. And when we had to report now to the French country, we worked even during Christmas because it didn't matter. You are there when everyone else is having a holiday and working. And yet most of these things could actually, when you think about them right now, could be automated. Bank reconciliations and all these reports happen within the click of a button. So I guess that adaptation is more about value addition, and moving forward, it's really moving away from those skills that maybe don't have a significant value to the business because they've all been taken up by the system, And your focus and role will be now thinking ahead of more of operational efficiencies and value addition in your role.
So I think the CFO is at the top of identifying the risk as they are and then advising accordingly.
In the last couple of years, we've seen emerging risks that we never ever thought about. In my previous professional background is also in audit. And I remember in PwC, we used to start audits by identifying risks. And these would be risks that are known already. I don't remember ever, and it's quite a while back, talking about climate risk, technology risk. Today we are even having, people risk as very high because of the demands that our employees are demanding today in the workplace and even in terms of their work. So what can we do about it? I think one of the things is we must intentionally, as a business, and this you can't do as a CFO alone because you don't have the realm of the whole landscape. We call it in our place an ecosystem. You must look at your business and identify the players in the ecosystem and what kind of risks can emerge. And that's why I said it's a bit of a hard job, but we must do it. Because you must imagine what could go wrong. And in everything that you do, at the table that you sit, as you're talking about that dollar, you must think to yourself, what could go wrong? It hasn't gone wrong. It has never even gone wrong. But you must think what has gone wrong. So that's number one. That intentionally think about in everything in the ecosystem, what exactly could go wrong. And you need the other players. Because for you to be able to identify these risks, sometimes it's expert field. It's those kind of things. A good example, as I mentioned, IFRS 17, very topical, very challenging, and has been a very exciting standard for insurance companies. Now we have significant actuarial input, assumptions, management judgments that we have to. What are the risks surrounding those kind of things? I mean, today I attend the actuarial meetings. We were making fun and we were telling the actuaries that now you've become accountants and we've become actuaries. You know, that is how the skill required. And today, when you're talking about insurance company results, you actually have to have actuarial speak in it. Because some of those assumptions are so critical. So those are risks that we never used to see in financial reporting. When we talk about financial reporting risk, we talk about it like that. But within financial reporting risks are now these assumptions we are making. There are all these models that we are, model risk and all these kind of things. So it's exactly the art of being able to see what you don't know, which is why I said it's a challenge. The second thing is scenario planning and stress testing are very critical in telling you what can your business bear in the full spectrum. And sometimes we don't do this, and I'm a victim of it, and then something goes horribly wrong. And you had it as a risk, but you'd never imagined the full extent to which it would impact your business. Those who are familiar with what happened in Ethiopia last year when the currency devalued, we have big business in Ethiopia and the currency devalued overnight. We were carrying, assets in that country, and immediately we had huge forex losses. We had never thought that the currency would ever devalue so significantly. So we had identified forex risk as a risk. Tick the box. Yeah, finance happy, risk management team happy. But did we ever sit back and think what could go wrong there? And stretched it. And then ask ourselves, what are the scenarios? If it devalues to this, what are the scenarios? What will we do? And when you answer what you will do, you'll actually start putting those intervention measures now. So that is a very important, and it's a learning process. I only talk about this because I guess I've been hit. And that's why it's very good to share, because then you also learn a lot as you go along the way. So scenario planning, stress testing, I know they are buzzwords, but now they become very, very relevant when you talk about risk management. So it's one thing identifying, it's another thing thinking about the extent.
Is it feasible to have risk management as a core function of the CFO, or should it be like a separate independent function where, you can allow an independent person to review, to follow up specifically risk factors? Because I think it can be kind of also overwhelming for the CFO to combine both. But if you have some level of independence, like now the way you're saying, like in Ethiopia, if there's like, I guess like in banks, the person of risk is separate from the person running finance, where you have someone constantly checking risk factors that will be affecting the business. So when it comes to your business planning or your financial statements, you'll always be reviewing them against the risk factors which are being provided by an independent person. So I guess it's a question of chicken and egg. Does it remain a core function for CFOs, or should it be handled separately to ensure that there's more credibility and sustainability of running the business forward? That's how I look at it. So I guess it will be, you might need to look at that as maybe a separate discussion.